But we now want some investment talk, and we have our market master joining us. Nimesh Chandan, the Chief Investment Officer at Bajaj Finserv AMC, has joined us. Nimesh, good morning. Thank you very much indeed for joining us. Wish you a very happy 2025, a prosperous one ahead. Start by telling us what should stock investors be prepared for. We got that, say, 8-9% gain last year at the index Nifty level and a good 24 to 29% on mid caps and small caps. What's the overall expectation in 25?
Good morning, Latha. Happy New Year to you too and your team and the viewers. 2025 will likely be a year of two halves where you see a different market in the first 6 months and then a completely different scene in the next 6. The first 6 months are a bit tough. There will be some uncertainty, some downgrades coming, political uncertainty, tariff wars, those kinds of probably negative or uncertainty causing news flows, which typically bulls don't like. So markets likely to be volatile in the first half. However, issues like slowdown in consumption or say the currency movements, I think they should stabilize by the second half. And we should have a better second half for 2025. Much of the domestic problems can be addressed of any slowdown that has occurred in the last half of 2024. I think those can be addressed. And hence, I'm optimistic for the year, but a little worried for the initial few months.
Nimesh, hi, good morning. Reema here and Happy New Year. I remember our last conversation where you had said that you're moving away from many of these domestic capex manufacturing related themes and you are taking a contra bet. And Pharma was one, I think specialized chemicals and even consumption. Now, Pharma has done brilliantly. It was the best sectoral gainer in 2024. What is the outlook now? First, sectorally going into 2025, how is your portfolio constructed?
Hello, Reema. Nice talking to you. I'm even more bullish on pharma and healthcare from here. So this is one sector that gives you a good diversification away from worrying about economic cycles, interest rates, geopolitics. So this is a good safe haven. I would say this is a defensive plus growth sector. There are many triggers here in terms of Biosecure Act helping the CDMO or CRAMS players. There are many many patented drugs which are going to go generic and which provides a good opportunity for generic players in India. And the domestic pharma market anyway is a good steady growth. So hospitals, pharmaceuticals, diagnostics, they will continue their steady growth. So this is a very beautiful safe haven and plus growth sector to be in. Consumption, I expect a recovery in the second half of the year, though I think this number, the Q3 numbers, should be better than Q2, and I believe Q4 will be better than Q3. We've seen good pickup in rural demand. Kharif harvest has been good. Rabi sowing has been good. So we are getting positive news from the rural side. Maybe urban side is still a bit slow, still a bit K-shaped recovery there. So second half likely to be better for consumption. Specialty chemicals, each player actually has done its own bit. So we had certain companies in dyes and pigments which became multi-baggers last year for us. Some were disappointing because midway we saw more dumping from China or more price pressure on their set of specialty chemicals. So those were a bit disappointing for us for the year. But consumption and healthcare likely to be the areas to be in 25.
Okay. Consumption, are you referring to mass consumption, Nimesh? Or would you go with the upper part of the K, as it were? You know, the hotels, airlines, that kind of consumption, discretionary.
Sectors like consumption and healthcare have a long way to go. However, the runway looks a little smooth for healthcare right now. Consumption, the end goal, or like the way we are going towards a $5,000 per capita GDP, those news are positive. It's just that we are going through some rough patch. This is a time actually to start picking good companies because these are good companies with good quality management, good brands, but going through a short-term rough patch.
Okay. So are you saying you will buy the mass consumption also? I mean, the levers, Godrej, the guy who gave us a bit of a scare, Daburs, you mean the mass consumption as well as the upper level, you know, the Blue Stars, the probably Trents, that kind as well. You mean both sides?
There are brilliant opportunities from daily groceries and FMCGs to quick commerce. So there are opportunities across this sector.
Hi Nimesh, good morning. Good to see you in. Nigel on this side. Nimesh, let's get a couple of factors out of the way. You've nicely, split up the year into two halves. So for the year, what kind of returns should we expect? Mid-single digit, high single digit returns, or could it be a bit of a down year for the year on the whole, 2025? And also last year, what did very well was the broader markets. Do you think this year is going to be a reverse and the large cap names, in fact, will do relatively better?
Hi, Nigel. I'm leaning towards that. I'm just about to call this year like 2018, where you actually see large caps doing very well compared to mid caps and small caps. That is where the valuations are attractive, and I think the growth is underpriced. Plus, the kind of selling you saw from foreign investors, I think the large caps have taken, borne the brunt of that selling, most of that selling. So I think next year, when things stabilize a bit in terms of global uncertainty, I think large caps should bounce back faster. There are brilliant companies within large caps, these top 100 companies, which have good growth, good quality, good return ratios, good cash flows. So it's a good time to pick actually large caps. So I'm tempted to almost say that this will be like 2018, where you see large caps doing much better than mid caps and small caps.
Okay, all right. Nimesh, let's talk about a couple of sectors there where it has an industry tailwind. The EMS space, we had, I think, briefly discussed about this as well sometime in 2024. That's got an industry tailwind, but the problem is everything is going to come at a very healthy price. What's your view on this space?
So markets have got excited about a few themes in the last 2 years, and EMS is one of them. And we've seen a lot of new listings also coming in the past couple of years in this area. I think valuations are high here. So that's what even making me a bit uncomfortable. It's not that companies will see lesser growth than what anticipated. The runway for them is also huge. But valuations, again, will reduce your compounding in these areas. So right now, I would be worried about valuations here.
Okay. You're underweight IT. Can you tell us the reason? Because IT has been doing well. There is hope that, the US economy continues to remain strong. Rupee is a tailwind. And also, what is the call on financials?
At which part of financials?
In IT, actually, we've reduced our underweight, but here the underweight that we have in some of our broader based funds is mainly mid caps and small caps. We are overweight on a couple of large cap names, but we are underweight on mid caps and small caps purely because of valuation. Next year will be good for IT, but I think much of it is already priced in. And if there is any slight negative in terms of higher visa costs or maybe some restrictions there, that would impact these smaller players and mid-sized players a little more. So optimist about IT, but more towards larger players compared to, again, here the smaller players there. In terms of financials, we are bullish on certain banks. Mainly private banks is where we are positioned. Credit growth is a bit of an issue for some time. I think we will see lower number for a few months still going on there. Asset quality, RBI somehow mentioned recently in the report that they are going to see a slightly worsening asset quality. It doesn't bother me much because we were at pristine kind of asset quality and we're moving slightly higher. That's part of the cycle, so we have to take that. Selective in financials, avoiding MFIs for now because they're still going to see some kind of regulatory changes coming in, and that could put pressure on their business and their margins.
That's a fair assessment, Nimesh. Thank you very much indeed for speaking about so many sectors and giving us a perspective for how the year might be. Difficult first half. The important point is how difficult can the January 20th swearing in make it. Thank you very much for joining us.